everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of July the 10th, 2017. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, just a quick review of the labor report. We're coming out of the non-farm payroll number. The dollar has initially had a very good reaction to that, but in my respectful opinion, the numbers don't line up here. Now, we can assess that the U6 number has gone basically from 9.6 in June 2016. We're now at 8.6, which looks good in the initial number, but the problem is we've gone up 200,000 from last month. So it's very likely that this is a dollar negative. Now, there's a lot of other components to the labor report, but to simplify things down, the U6 number looks at the broader unemployment situation, and it has gotten slightly worse. Now, we've been moving in the right direction. February 2017, we've gone from 9.2, then 8.9, 8.6, then a very good month in the month of June at 8.4, but now we've moved the opposite direction. So that's something we absolutely have to take into consideration in the Forex market when we're either basically buying or selling US dollars against the major pairs. Now, with the dollar index, we do have a very mixed signal here with the VantagePoint indicators, but we're basically still running along this channel that I've talked about over the last several weeks. If we look at it on a year-over-year basis, you can see that the price action guys are going to be watching this area down around 94, 95.50 approximately, and they're going to be watching that area very, very closely. Now, when we look at the indicators from VantagePoint, our predicted MACD is crossed to the trigger to the downside. It's still pointing lower inside this channel. We've had multiple retracements to that key vantage point level at 96.20, all of which has failed. So we've had a little bit of a bounce on Friday after the non-farm payroll number, but again, much like what I talk about with my own direct clients, that whatever the market does on the Friday on the non-farm payroll, it usually does the exact opposite by Tuesday of the next week. So be careful of a false break on the dollar, but the indicators from VantagePoint here are predominantly still pointing towards further US dollar weakness. Now, with the Euro-US currency, I've talked about this one extensively also over the last several weeks. I believe this is an excellent call from VantagePoint on this triple EMA cross. Remember here, we've got a signal all the way back to June the 26th to start buying this. We've had a big move up, but is that the end for the Euro rally? Well, guys, I'm not really sure that that's the case here. When we look at this and we go back, we had a significant swing high. We've had multiple tests against this area, and now we've broken this area. So the area around 113 is 113, 112.50, very, very important to a continued rally in the Euro. When we look at the VantagePoint key levels, the 18-day, there it is, guys, 113. So this is a big level, but we're not even getting to that. 113.51, we've closed at 113.96. Again, you can see the market just hugging that VantagePoint 8-day predicted moving average, and it continues to be a good buy off that area. But right now, longs are definitely in play between 113.51, and as long as we hold above 112.99, it is still a good buying opportunity in my respectful opinion. Our predicted MACD is confirming that. Our predicted RSI looks to be corrective in nature as it's coming off heavily overbought territory. We've bounced off the 60 level on the predicted RSI. We're testing it again, but I believe that the Euro will likely continue to advance. Now, with the US Swiss franc, the US Swiss franc, of course, mirrors Euro US, but it really mirrors the dollar index. So if I look at this low point right here and I switch back very quickly to the dollar index, you can see that these two chart setups are almost identical. So in order for US Swiss franc to have any chance of moving higher, we must break 96.44 and stay above this area. We're closing 96.33 despite what some interpret as a strong labor report. Again, I don't really interpret that as a strong labor report at all. I think it's mediocre at best and slightly dollar negative. So when we look at this, again, this pair is going to follow Euro-US. Euro-US goes higher, US Swiss franc goes lower. That's how this works, guys. Don't forget that. They are not really two separate trades. They are tied together along with that dollar index. The two pairs in the Forex that are most heavily affected by the dollar index is, of course, US Swiss franc and Euro-US. US. So right now, still a bias slightly to the downside. We can see our neural index turning down. We do have a crossover on the predicted MACD back to the upside, and the predicted RSI is recovering, but that's left to be seen if there's any sustainable rally here to the upside. Now, as we come into the British pound for next week, the VantagePoint indicators here, nice call, very nice call. One of my favorite signals from the software here. The medium term crossing over the long term predicted difference, and I really like it when I get it with the neural index like this. And you can see when I combine this with price action, very identifiable price action based on our trend lines here, we can see that this is a nice short. However, now we're getting caught up on that key VantagePoint level, 128.77. We're closing 128.85 on, again, what's interpreted, at least in the short term, as a good labor report. But once the market, real money comes into the market, I think they're going to look closer, and I believe that the additional VantagePoint indicators are basically telling us that this is probably going higher after a corrective move lower. We've crossed over the zero line on the predicted MACD. Our predicted RSI is holding above 50. We've come through that labor report. We're holding above that 18-day predicted moving average from VantagePoint. So right now, the move on the pound dollar looks corrective in nature only. We do have a big trend line here at 130.50, but we've also got very heavy support at 126.50. So right now we're looking for the neural index to turn higher, but I believe the longer term indicators of the predicted MACD and the predicted RSI, along with of course the 18-day predicted moving average, will dominate here, and ultimately this pair is likely to go higher. Now we know that with the dollar index and the US dollar in general, it tends to be strong around the beginning of the month, but it really hasn't had a lot of strength here. And actually, in last week's video, I talked about the dollar was likely to have a tough week this previous week, which of course it did. And I believe that is likely to continue after a very minor corrective move. Now, with the dollar yen, this is a key pair here coming into next week, which will dictate the dollar. Now, when we look at the past ways that VantagePoint has called this, and we combine our indicators together here, when we hit a swing high, you can see that as the predicted RSI moved into overbought territory, as did our predicted MACD, the pair slowly started to turn off the 114.50 area, and that signal from VantagePoint led to a move all the way down to 109, an absolutely massive move to the downside. But guys, I can tell you that order flow traders are going to be looking at the exact same thing. We've got our indicators from VantagePoint that are basically moving sideways, our predicted RSI in heavily overbought territory, which is consistent with the previous signal we got back in May of this same year. So basically, in short, the indicators are warning that this could be it for the dollar yen. So if the dollar yen moves lower, that's also going to push the equities lower when the US dollar falls. So when we once again here, guys, these rallies, you can almost count the days in how many days it's rallied to the upside. So we've got 2, 4, 6, 8, 10, 12, 14, about 15 trading days here. So right now we've got 2, 4, 6, 8, 10, 12. We're about 17 days in. You can see we were already starting to stall right here at about 113.50, but then the payroll number came out. So right now, heavy bias to the downside if a corrective move, nothing else, back to the 112.35 area, the key VantagePoint 18-day predicted moving average. If that area holds, we can reconsider at that time longs, but I think that longs at this area are very, very dangerous unless we can break through the 114.50 area. And of course, if we look back our charts back out here, we go out to a year, we can see a better picture here. If we can break through 114.50, that would absolutely open the door to the 116, maybe even the 118 area. But again, guys, if we cannot break through that area, that absolutely opens the door back to the 109 area. Now, as we come into our three main commodity currencies for next week, a lot of action is going to be in the US CAD. A lot of jawboning from the Bank of Canada that they're going to hike next week. Now, I think that there is a better than 50% probability they're going to hike now based on the labor report out of Canada on Friday. But a lot of this, guys, is being priced in. So be careful of a whipsaw move higher. I'm already seeing indicators from VantagePoint warning of this. And there is our medium-term crossing, our long-term predicted difference back to the upside while the market is moving lower. Another huge advantage of using the VantagePoint software in this particular way. We very clearly can identify we are in heavily oversold territory. This pair, guys, I would basically stay clear of until we get past the Bank of Canada's announcement, because if they don't hike, or in the alternative they do hike, but then say it's a one-off hike and we're not looking at any further hikes until latter part of 2018 or 2019, the market will immediately bail out of the Canadian dollar despite the rate hike. So this is going to get very choppy. Right now our key vantage point level is 131.09. We've got an oversold condition, and we've got a medium-term trend that is weakening against the longer-term downtrend. So these are the things we want to look at in our trading and make sure we're identifying these potential opportunities. Now, as we come into our final two, Aussie US, New Zealand US, very similar trades here, guys, but what we can assess is that the Aussie currency is sitting on a massive trend line here, which is also consistent with the VantagePoint 18-day predicted moving average at 75.96. So we're looking to see if this area is going to hold. I would imagine we're going to have a small breach of this area, and then buyers are likely going to come back in on dollar weakness. Now, I'm looking at these indicators very closely from VantagePoint. I want to make sure that I'm not missing something here. And when I look at the predicted RSI, 52.7, one of my favorite indicators because, of course, it is a leading indicator. Our neural index has switched back to the upside despite the fact that the dollar strengthened right across the board on Friday. A lot of analysts are very dollar positive. I don't think really I am, but the fact of the matter is I look at VantagePoint and their indicators based on the correlation to 30 other markets are suggesting we could have some further strength in the Aussie dollar, which I would support as we're all tangled up around this 18-day predicted moving average. So basically watch the 75.50 area very closely this coming week with the potential of an opportunity to buy. Now, New Zealand not looking quite as rosy here. We've got a big trend line resistance coming in at just under 74, but we're holding on that key VantagePoint 18-day predicted moving average at 72.52, but just barely. Now, if we break through this level, that could trigger a bigger move to the downside, but that could also be caused by Aussie strength. So when I look at this right now, unless I get a sustained break of 72.52 for not just one day here, guys, but for a couple of days in a row that I get a clean break of this VantagePoint level, there's still a minor bias to the upside, believe it or not, based around dollar weakness and potentially the misinterpretation of that labor report. So we've got a lot going on next week, but again, I think we're in for a very, very good trading week.